announcer is the St. Catharines Niagara Market Analyst for the Canada Mortgage and Housing Corporation. It's called CMHC. He obtained his bachelor's degree in economics from Wilfrid Laurier University and a master's degree in economics from Queen's University. Prior to working as a market analyst for the CMHC, Jordan worked as an economist for an international development consulting firm, designing and evaluating development projects around the world. And I can let Jordan go into what the Canada Mortgage and Housing Corporation does and why it's so important for us to know the statistics from about the area. And he has some very interesting things to talk about the vacancy rate in St. Catharines. I had the pleasure of having him share my dinner with him, and we were discussing why Niagara is so very important and what the vacancy rate has to do with getting more people down here. So I thank you very much for coming. Let's give him a round of applause. Thank you very much.
All right, so the CMHC, the Canada Mortgage and Housing Corporation, what we do is our mandate is to help Canadians meet their housing needs. We're one of the largest mortgage insurers, but that's not exactly what I do. What I do is market analysis. So, and my regions, as previously stated, are St. Catharines, Niagara, and Barrie. So what my goal today is to go through my presentation and kind of look at what happened in St. Catharines, Niagara in 2017, because it was a big year, for sure. And kind of how does that affect our expectations going forward into 2018? So I'd like to apologize first because I don't have a projector. But what I do have are printouts of the slides, which will get passed around, so you can kind of have a look, because there's some figures and some tables and some numbers that are definitely quite interesting. So I'll kind of go through with the computer as a bit of a cue, I guess, to follow along later once they're handed out. And yeah, without any further ado, I'll get to it. So my goal for today is to answer a few questions, 6 questions in fact. First is, why were there so many row units started in 2017? It was a historical high. There were a lot of multi-units being built in 2017. So kind of what's driving that? Next is, why is the vacancy rate so low? It's actually at a historical low right now. The rental market is very tight. And those 2 questions are actually kind of connected. And I'm sure that gets some gears turning and some of you may be able to figure it out. But next, the next question I'll be answering is, how do our forecasts and for the GTA and Hamilton impact our forecast for St. Catharines and Niagara? These are very closely linked housing markets. And if you want to know what's kind of going to be going on in St. Catharines, you should probably have your eye a little bit at Hamilton and Toronto as well. Next, we're going to be looking at what our prediction for employment and population and other housing market drivers. Because obviously, the population is very important, because if there's a growing population, people need places to live. And employment is very important because if there are jobs, you got people, you need houses. So, and then finally, the one that's probably most interesting for everyone is kind of what are our expectations for average MLS housing prices and sales going into 2018. It was a very hot year in 2017, so we'll see what's going on in 2018. So first, I'd like to look at annual starts. So a start is the very, very beginning of construction. The cement is laid and everything, the permits are done, building's going to commence. And it's very important to kind of look at starts because it kind of shows you how the housing market's expanding, right? Like how's it growing to meet its needs, and it kind of gives you an idea of what's to come. So if you look at annual starts all the way back to 1990, in 2017 there were the most starts since 1990. So the most kind of like housing market expansion in almost 3 decades. So yeah, and I'm sure you know it's been a very interesting period since about 2012 for St. Catharines, Niagara, and I guess a lot of places in Ontario as well. There's been a lot of activity, but it's really peaked in 2017. So let's take a closer look. So this slide kind of shows the number of starts And the difference between 2017 starts and 2016 starts by unit type. So we have single units, semi-units, rows, and apartments. So overall, starts grew by about 12%, which is pretty impressive given that starts were already at pretty high in 2016, as we saw in the previous graph. So it was a strong year for starts. However, single and semi-starts were actually down from previous year. There is less singles and less semis being started than in 2016, but the numbers are still pretty strong. There's been a bit of a shift towards multi-units. So there are more rows being built. As I said, it's the record amount of rows in like 30 years, almost 30 years. And there are more apartments being built and condos, more multi-units. So we kind of ask ourselves, why is there this shift towards multi-units? Does anyone have any ideas?
Growing population.
Growing population?
You know, the immigrants. I mean, I think there's a lot of immigration coming into Canada.
For sure, yeah.
They're landing in the areas of the GTA and, you know, outskirts. So
that definitely contributes to it.
That's just from my little research.
Mm-hmm. No, that definitely contributes to it. Anyone else have any ideas?
Yep, lack of space in some of the larger cities.
Land space in larger cities,
Yeah.
that's right, because there is a bit of a land constraint in some of the more popular areas.
I think it's income-based too.
Income-based, perhaps, yeah. No, that definitely affects it as well, but price, yes. That's what I was looking for. All the other ones are definitely true, but price. So if we look at prices, they've been growing really quickly, and they've been growing at a growing rate. So in 2013, they grew at 3%, 2014, 5%, then 9%, then all the way to 22% average MLS price from 2016 to 2017. That's pretty huge for real estate. Yeah, you've been in real estate for so long. Have you ever seen that? Really? No. Yeah, 22%. So there's been a lot of price acceleration, and so prices have gone up. People are kind of getting shifted towards multi-units, and although single units and multi-units, their price have been kind of growing at a similar rate. Obviously, multi-units are comparatively more affordable, so people are going to get driven to these multi-units. So where did prices grow the most? So looking at newly built single units across the census subdivisions in St. Catharines, and there's quite a few in St. Catharines. It's a little robust community. We have Niagara on the Lake that experienced the most growth at about 32%. The average MLS price in 2017 was about $770,000. That's about $750,000 is the average MLS price. And at 32% growth from 2016 to 2017, that's a big jump. Next is Niagara Falls, then St. Catharines. Niagara Falls at 25%, St. Catharines at 21%, Thorold at 17%, Welland at 16%, Fort Erie at 16%, and I just kind of listed the ones that experienced double-digit growth. Unfortunately, we don't have data for, Port Colborne and Wainfleet, just because there were so few sales that we had to kind of suppress the data, so it remains anonymous.
Sorry, are those price increases or is that quantity? Well, when you say 32%,
32% average MLS price increase. Yeah. So it was around like 580,000, somewhere around there in 2016. So yeah, they've been growing. So now that we see housing prices are growing quite exponentially, how does that impact our rental market? Well, as I was saying earlier, vacancy rates are at an all-time historic low, 1.5%. Typically, a healthy vacancy rate for a rental market is about 3%. So the rental market's very tight, and what happens when it's very tight is rents go up. So rents are going up above the 5-year average. The 5-year average from 2012 to 2016 was about 2.8%, and in 2017 it was 3.7%. But it's important to note that rents are going up, but nowhere nearly as quickly as housing prices, right? So renting still is kind of like an affordable option for certain individuals. So, don't want to get there. I want to ask another question first. So we looked at the increase in pricing, and we looked at in housing prices rather, and we looked at how that affects rental market. Does anyone know why prices have gone up in St. Catharines, Niagara so much in the last couple of years?
Because of Toronto market.
Toronto market. Yeah, those markets are closely linked. And it's interesting because St. Catharines, Niagara has a lot, the St. Catharines, Niagara region rather, has a lot of migration from Toronto and Hamilton, and it's positive net migration. And those two cities are about 50% of the people moving into St. Catharines, Niagara. So the price gap between the GTA, Hamilton, and St. Catharines is pretty important because these people often are moving for relative affordability, especially in Hamilton, because then they can just commute if they work there. But also, a lot of buyers from these regions aren't migrants. Yeah, a lot of them are moving here, and in fact, estimates are at about 60% to 80% of buyers in the St. Catharines, Niagara region are from the GTA or Hamilton. That's a big chunk.
This is the retirement area. This becomes a retirement area for them.
Oh no, that definitely drives a lot of migrants for sure, and I'll get to that. But so the price gap is pretty important in seeing kind of how demand is going to act in these regions, right? So when the price gap is really high, that means that St. Catharines, Niagara is quite affordable relative to these areas, and it's going to be driving individuals down here. So we're kind of looking at it over time, and the price gap got really big in 2017. So in the first quarter of 2017, these three areas, St. Catharines, Niagara, Toronto, and Hamilton, all experienced 25% growth in the first quarter of 2017. But what happens is because these areas are more expensive to begin with, 25% growth in these areas is going to inflate the price gap even further. In March 2017, the average house in the GTA, or the average MLS price in the GTA, was about $515,000 more than St. Catharines, Niagara. So we saw a lot of buyers from this area coming to St. Catharines, Niagara. And in this period of like rapid or quite strong price growth, all these markets got really heated. The sales to new listing ratio was between high 80s to low 90s. That means for each new listing on the market, almost 1 for 1, there's a sale. So that drives up prices as well. But kind of what happened after that is the Ontario Fair Housing Plan came in, mortgage rates, they're announced that they're increasing, announced that there are going to be some changes to mortgage lending. So the market's kind of cooled down quite a bit, because there was a lot of speculative activity at that time. A lot of people thought that they were buying, and a lot of buyers from the GTA and Hamilton were buying St. Catharines, Niagara because they had with expectations of capital appreciation. But the market has cooled down a bit since then, more so in the GTA. The GTA saw a greater cool down than the St. Catharines and Niagara region. And yeah, so it's all kind of cooled down a bit. It's kind of lowered the price gap. So right now, St. Catharines isn't as relatively cheaper to GTA and Hamilton houses. So you're expecting that buyer activity from these areas will kind of settle a bit until the price gap kind of recovers. So we do a lot of forecasting at the CMHC. We do a housing market outlook report in the fall, which kind of summarizes a little what's happened in the first 3 quarters of that year, kind of what do we expect for the next 2 years. And our results for the Toronto market are pretty important because, as I said, what's going to be happening in Toronto affects what's going to be happening here. So the average MLS price in Toronto was $823,000 in 2017. So even though you had this huge increase and kind of cool down period, overall, 2017 was a huge year. It was higher than it was in 2016. But going forward, we expect prices to continue to cool down in the GTA a little bit. There are a lot of, we expect sales to get a little balanced as well because although prices are a lot cheaper, which draws more buyers to the market, right? house is a little more expensive now, and it's a little harder, right? Interest rates are up, mortgage rates are up, and it's a little harder to get a mortgage now. But overall, it's in a bit of a recovery period. So next we'll look at Hamilton. Hamilton actually didn't have as much of a cool down as Toronto, and it actually recovered quite well, relatively speaking. So the average MLS price in Toronto in 2017 was about $567,000. And we expect it to kind of be about that. Kind of, the market's a lot more stable now. So we expect it to kind of, sales and housing prices to kind of remain pretty similar to what it was. So you can expect the lower, you can expect there to kind of be more Hamilton buyers, or closer to what there was before, just because their market is kind of recovering a little bit better. So now we're going to look at some other stuff that affect housing demand. So I said population earlier, and that includes like migration and stuff. So the population growth has actually been pretty good in St. Catharines, Niagara. It's been kind of on an upward trend since about 2012, and it kind of peaked in 2016. It lowered a bit in 2017, but we expect it to go at about a healthy 0.5%. And it's kind of growing because, as that gentleman said earlier, it still remains a very popular, besides being more affordable, it still remains a pretty popular location for retirees and pre-retirees. So I think like the largest group of migrants fall in the age 45 to 65 category. So what about employment? Employment's pretty important as well. Employment's actually down a bit in 2017. It was pretty high between 2012 to 2016, but it's down a bit, and that's mainly because there was a bit of a loss in construction employment. A lot of large-scale construction projects have kind of completed, so we're seeing a bit of a drop there, but we expect it to kind of bounce back and kind of be above 2016 in 2018. So we're going to get some employment growth in 2018, and we're going to take a look at what industries are kind of drive that. So as I said, there's been less construction employment. There was about 4,100 less jobs, but kind of what's going up is manufacturing. So manufacturing has been kind of on an upward trend since its low in 2015. And that's mainly because there's an announcement, been quite a few reports that there being a lot of manufacturing investment in the St. Catharines Niagara region. I know GM is investing, General Electric is investing, and so we expect manufacturing to kind of grow a bit, but there is kind of a bit of a consideration, and part of it is the U.S. automotive market is kind of slowing down a little bit, automotive demand, so that's one thing we have to kind of factor in, and another thing is trade relations with the U.S. That can also negatively impact the manufacturing industry as well. So, how will mortgage interest rates and the new mortgage rules affect demand? As I'm sure many of you know, the Bank of Canada raised the interest rate twice in 2017 and again in 2018. As of January 17th, the 5-year mortgage rate was about 5.14%, or raised to that. So higher mortgage rates obviously increases the cost of home ownership. So we expect housing demand to kind of cool down a little bit because of that, and that's kind of what we've been seeing with the cool down in 2017. Next, it is the Auspice new mortgage rules. So before, if you had a mortgage and it had less than a 20% down payment, you had to get your mortgage insured and stress tested. But starting January 1st, 2018, so we're already in this period, every mortgage has to get stress tested. And what that means is they have to ensure that the buyer could make their mortgage payments at either the Bank of Canada 5-year rate, which is 5.14%, or at 2% higher of whatever rate they were able to obtain. Whichever of those is higher, they have to be stress tested at that rate. So that, of course, is going to kind of be a barrier to some people in the market, in the housing market, because they might not be able to get mortgages, and they might be forced to kind of rent out a little more. So that's kind of good for the rental market. So kind of looking forward into 2018, given all these factors, given the price acceleration, how that impacted the rental market, given like what are the drivers we should look at for a forecast. Looking towards 2018, we'll start with single units. How many single units do we think are going to be started? So 2017, as I said earlier, it was single unit starts were lower than 2016, but they're still well above the 5-year average, and they're still pretty high. But we do expect them to kind of cool down just a little bit in 2018 because prices are higher, and these are kind of the more higher housing products. And also, there is a bit of land scarcity in a lot of St. Catharines, like very popular areas where single units are pretty popular. So, will 2018 be another record year for multi-starts? So, as I was saying earlier, there was a lot of multi-starts in 2017, a lot. Going into 2018, we expect it to kind of relax a little bit. Yeah, we expect it to kind of relax a little bit. The lack of affordability in the housing market, or kind of driven by like single units increasing and stuff like that, is kind of increasing condo demand, and we expect a lot more condos to be built, but they're still in kind of the sale phase right now, and we expect them to kind of start in 2019. So 2018 is going to cool down a bit. In 2019, we should see a bump back up. But also the new rent control extensions and stuff might kind of might dampen that a little bit. So, what do we expect to happen to prices in 2018 and sales? So, so prices went up a lot in 2017, as we already said, compared to 2016. Huge growth, but mortgage rates and a lot of other stuff are kind of factoring into making homeownership a little more expensive. And as a result, we expect sales to kind of ease a little bit. I've been using that word a lot, but it is kind of just relaxing a little bit. 2017 was a very heated time, especially Q1 2017. And the market's a little more balanced now. It's a little less hectic. So we expect prices to kind of go down just a little bit. So the average price was about $391,000 in St. Catharines, Niagara in 2017. And we expect it to kind of taper down to about $370,000 to $387,000. So just a little bit less, just a little bit of a recovery period. But once again, a huge variable in this right now is the GTA and Hamilton market. Because if we see a quick recovery in the GTA, you can expect a lot of demand to be pushed back to St. Catharines, Niagara again, and it will drive prices up as well. But right now, we expect 2018 to be kind of a bit of a cool period. And that's it for my presentation. We're now in the question period. I'm sure you guys have plenty of questions. Yes?
So who owns CMHC?
We are a crown corporation, so the federal government owns us. Yeah. No, I think it was always owned by the government. There used to be some veteran housing thing a long time ago, long before I started working there.
Criteria changed, correct? The last few years?
Oh, what criteria?
What they voted, and what they give now, and what they used to be. Like insurance.
Oh, okay, yeah, right, yeah. No, well, it's still mandatory for mortgages to be insured under 20%.
But what was it, 4% a bunch of years ago?
Oh, yeah, no, it's definitely ramped up since 2008. Yeah, for sure. Mm-hmm.
I can just say something. I've been in the market for 18 years, since 2000, and I use the same mortgage broker and also the same real estate agent. And my real estate agent said, Maria, she said, I've never seen this in the 30 years that I've been in business. What's been going on with these multiple offers going on? She said, I've never seen that.
Mm-hmm.
So she could hardly keep up with what was going on. And her daughter's also a real estate agent, and yes, there's so much good offers coming in, doing well.
Oh, yeah?
Niagara Falls and Welling, as we're
as we speak.
Yeah, as we're speaking right
Yeah.
Huh.
Yeah, so it's still a hot market. I don't know if it's gonna be quite as hot as it was last year. That, I guess.
Well, yeah, 22% or something, or 25% in the first quarter. That's
Pretty fast.
really hot for real estate.
Do you know what it's dropped down to now?
In regards to what? Price growth?
Yeah.
Um,
Because
well,
I know in Toronto it dropped down, what, 30% or something like that, Jonathan?
yeah, something.
In Toronto last summer?
Yeah, it's tapered down a bit. I guess we can kind of guess from the price growth. I'd have to look into that and kind of see. I'd have to get back to you on that and actually see where the data is at in December and stuff. And I'd have to look at like seasonally adjusted too, because the real estate market is kind of like, yeah. So I have to get back to you on
Is
that.
that not because the government instituted the rules so they couldn't have foreign investors spend more money here?
Well, this is what.
That was part of the Ontario Fair Housing Plan. Yes, yeah,
It was part of who?
the Ontario Fair Housing Plan.
I thought they did it across they did in Vancouver, they did.
Perhaps, yeah, but I think in Ontario it's done at the provincial level. Yeah. And they also have a higher, they have some fees for if you leave the unit vacant or something, which is also kind of targeted towards foreign buyers. Any other questions?
Yes, because speaking about foreign buyers were buying houses and not putting anyone in there.
Yeah, yeah.
And so they would just stay empty. And then what was happening is there wasn't enough housing to go around for the fair housing market.
Yeah, yeah.
Which is what I've noticed. What I've noticed now too is that a lot of landlords are purchasing properties, going in, and as the tenants are vacating the premises, let's say if it's an apartment building, go in, fix it up, and then they raise the rents because they put the money in there. So what bedroom? Do you have statistics for the 1 bedroom and 2 bedrooms and 3 bedrooms?
I have to get back to you on that. I have 2-bedroom average rent in
Okay, what is it?
2017.
Because that's gone up quite a bit. Even the 1 bedroom, 1 bedroom now is anywhere from $900 to $1,200 a month. 1 bedroom. In St. Pat. It's gone up
I
high.
have the growth rate, but all of this is available on our housing market data portal,
Yeah.
which there's a link to.
I'll
Or
be sending that out to them.
perfect, we'll send you out a link, so you can see all these stuff yourself. You can see what the average rental rates were for 1 bedroom, 2 bedroom, 3 bedroom in 2017,
Yeah.
vacancy rates,
It was,
everything.
it was in the CMHC report, all of that information
Mhm,
that
yeah.
we plugged out in, I believe it was in the fall, so
Mhm.
all of that is there.
Does anyone have any more questions for Jonathan? Can I have him here now?
No problem.
No more questions? Maybe you want to speak to the private, right? So let's give a round of applause. Thank you very much. And I'll be passing around your presentation. I'll be passing around the presentation, and I don't know what time is it right now? 7:11. Okay, so what I'd like to do is, you'll have some time to talk to the CMHC representative, but I'd like to have anyone come up and introduce themselves and tell us a little bit about what you're looking for, or if there's any upcoming events in your area. So who would like to come up first? Anyone want to come up now? No? Nobody has any, no events coming up? No? I know, yes, go ahead.
I don't know, Lori's wants to mention there's an open house in Buffalo.
Oh, yes, yes. There's an open house in Buffalo for Harry Stinson's Hotel. We had Harry Stinson come and be one of our speakers here. He's a developer out of Toronto who's developing a lot in Hamilton and also Buffalo. And they did finally purchase that hotel. It closed actually, and they did quite well actually. So, there's different kinds of strategies of investing that you might be interested in. And Rob's going to be passing the information that he took off the website for CMHC, and Rob will be putting that on our Facebook page. So I hope you go on the Facebook page of Canadian Real Estate Investors Association. Please sign up for that, and we have a discussion going on about different topics, and we do investigative reports on what's going on with the rental industry and real estate. Does anyone have any questions at all? No one wants to introduce themselves? Yes, please.
Well, it's also at Rockstar Real Estate is doing a property tour in St. Catharines on Saturday.
I can't hear you. You want to stand up, please?
Rockstar Real Estate out of Hamilton,
Yes.
they're doing a property tour in St. Catharines on Saturday.
Oh, fantastic. Okay, so what time does it start and when is it happening?
You have to go to the website. They have a lunch and learn in Hamilton. They're coming down here to tour.
Okay. Well, I know a lot of Rockstar property, people are coming down here to purchase. They actually bought my father's and my mother's house. And we were part of that 25% increase. We did very well with my parents' property. So you know, you just have to see if they're gonna get their money back, right? If you put 100,000 or more and you're in an area that you're not gonna get that kind of money, so you may have to catch up with the inflation of the times. But I know that there's a lady, her name is Cora from Toronto, that actually has some books to give away. So I give you this opportunity to network with each other right now. I'm going to be handing out the presentation that